pretty much doom and gloom. Resources are looking better, and it's interesting because commodities are under pressure, but then the key is in the local currency, isn't it?
Absolutely. Breaching that key 8 level today. Look, I think when we got into the office this morning and what happened in Asia this morning, we expected a down day. But, you know, like you rightly point out, I think the Rand breaching that 8 level has lent support to the resource counters. And Sasol in particular, I mean, I think it's a decent performance for the day. So a bit surprising. We were expecting a much lower day today, but yeah, the Rand lending support.
And I mean, look at it's mostly the resource counters. Kumba's up 0.5% or so. AngloGold Ashanti, that just really stuck out for me, up 2.25%. So that's quite a strong performance. And Goldfields was, I suspect, top of the top 40, up over 3% today. Despite the fact that gold is coming under pressure.
Yeah, look, I think, you know, we have these gold companies that are making money now. You've seen Harmony's results, good profits coming from them. I think also the safety issue with a combination of the weaker Rand playing into the gold company hands, and therefore you got the companies higher today.
And Harmony sitting at 72 Rand. And it's interesting, it's up 2.5%. I remember when Harmony, a lot of speculation with regards to the Papua New Guinea asset. I mean, it breached even 100 Rand. It's now back at 72. Is this a buy?
Look, I think from our perspective, we believe that, you know, we're long-term investors. So we look at, you know, a 3 to 5 year view. So we would stay away from the gold companies, although they are looking attractive at these levels, are making good money. And if you believe, like some of the commentators are saying, that gold still could get to $2,000, you know, given the political situation in the Eurozone.
I was going to say, that actually really depends on whether you are quite bearish about the future and you really believe there's more stimulus to come, isn't that so?
But look, some people are calling gold at $2,000, and if that pans out, then, you know, you can make some good money on these gold companies.
Okay, we also had Barlow World with the trading update out today. First half earnings between 65 to 75% higher. These are very good numbers, and it's all about the mining sector.
Yeah, look, it's disappointing, and you can see the way the market reacted to it. Close to 8% lower on the day. I think it was 7.5% lower. Bearing in mind that the market was looking for over 100% better. So if you look at the top range of that trading statement, they will earn, you know, roughly, I think it's about 252 in the first 6 months. The market's looking for over 7 for the full year, which means that they're going to earn about 450 for the second half.
But why is it down so significantly today?
Because the trading update is disappointing.
75% higher?
Yeah, market's looking for much better. Also bear in mind that, you know, Rio Tinto and Bulletin has come out to say that, you know, they're cutting back on their capex. Barlow World is geared to this environment, and, you know, investors are probably forward-looking. This trading update is disappointing. Coupled with that, you know, they're probably just selling it off.
Absolutely. I mean, 8% down on the day. Is that a buy for you?
Look, we are looking for an entry point, and it's something that we'll probably consider. Look, the motor vehicle side is, we believe, is continuing to do well. You saw that in Imperial numbers and AMH, so we like the motor vehicle business. But on the pure commodity side, you know, we're battling as to whether we play a Barlow World or the direct commodity companies like Bulletin.
Okay, so let's talk about the direct commodity companies. And we've got Diversifieds, BHP Bulletin and Anglo American. And again, there's two, you know, pacts. The one that says that these companies are looking very cheap and we are going to expect fantastic earnings, great assets, cash on the balance sheet, things are looking good. And the other says, well, we've got to actually exercise caution. They are cheap for a reason. Look,
if you take what's happening in the Eurozone currently, so there's so much of uncertainty that people are taking a step back and saying, let's rather remain defensive for a little while. We recognize that the value is in the commodity companies, but if you've got uncertainty in the Eurozone and demand out of China that pulls back, then these commodity companies will continue to look cheap and remain cheap for longer. So I think investors for the moment are saying, let's just hold back, let's remain defensive, let's remain with the defensive industrials, and, you know, just assess the, you know, how this plays out. And, you know, but you rightly point out the value is in the commodity companies.
Which commodity? I mean, Anglo American 278.
Yes, absolutely.
BHP Bulletin 238.
Current P is at below 8 times. It's
I know, and Anglo American actually went up to over 330 at one point.
Yes.
You know, the beginning of the year.
Yeah, look, at some point you've got to bite the bullet and, you know, get into it. Yeah, absolutely.
Okay, let's touch on construction. We had Esau Frankie out with fantastic trading updates earlier this week. Front end of construction seeming to show signs of life, which is fantastic. Life enough for you where you could say, let's buy these stocks.
Yeah, look, we think there's still a lot of uncertainty within the construction companies. If you look at Esau Frankie's margins, it's very thin. And the overcapacity in the system is still there, and people are still fighting for business. So you've got some business that are at negative margins, and business that's being tendered for at very low margins. So we think the overcapacity is still there. Government work is very slow to come to the market. What's happening with SANRAL, the cancelling of the N1, N2 Winelands project, the Gauteng, freeway improvement, that's been cancelled. So it's going to be difficult for the construction companies, we believe.
You said overcapacity, and I've actually had people on this desk telling me that if government makes good on its promise to filter through even just north of 3 trillion rand over the next few years into construction, that then there isn't enough capacity in the market. And obviously we're talking about targets even ranging to 2020. Yeah.
No, we would agree with that, but you have so much of uncertainty from government that we're not seeing the flow of work to the market. And this uncertainty doesn't warrant an investment, we believe, in construction companies right now. We'd rather miss the 15% run and be on the tail end, but we're not comfortable to get into that right now.
You mentioned SANRAL, the CEO resigning.
Yes, look, we think that's very disappointing. It's one of the better run government enterprises out there. I think if you have a look at what the market, the construction companies have said, they've worked well with SANRAL, payments were on time. We think it's a big disappointment for SANRAL, its ability to raise cash going forward. But they've appointed, I forget his name, I think it's Chris Smith.
Yeah, I'll tell you now who it is.
And I think the markets rate him as well. He's part of the management team, and we'll just have to wait and see how that plays out.
Chris Smith, exactly. Yeah, he's taking over for now. We had SPAR also out with some numbers, and we saw a number of around 9.1% on the earnings per share front. Yeah. We know one sort of tax issue that came through, but regardless of that, it's quite worrying that he was talking about the consumer still looking that it's under pressure. Yeah, look, I think it's a tough environment. I think the earnings number was slightly below what the market was looking for on a fully diluted basis. I think they came in at 2.82. Market was looking for slightly above 3, but we'll wait to see how the second half plays out. Look, the company is not cheap. If you double the first half earnings, it's on a 20 PE. And if you look at what the consensus number is looking for on the second half, it puts it on an 18 PE. So it's not looking cheap. And I think some of the other retail companies, the likes of Pick n Pay's coming onto the radar screen, maybe they'll get things right with their distribution network. And even a Massmart, the pullback in Massmart might look attractive. Massmart down 2.25%, Shoprite down, and SPAR down almost 5%. So retail is not a good day. Thank you so very much, Suraj. Great to have you in studio. Suraj Sookdhew joining us for a look at the South African markets.